Hey everybody, hey, good morning. My name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com, and today is Monday, ladies and gentlemen. It's the last trading week of the month of August and in general summer. So officially, look, we have an interesting week, I think so, because again we have a bunch of economic data sets, important economic data sets that are going to come out. Friday was a total blow up in the market because of Powell. So yeah, it's let's see how this is going to play out. Of course, we have Nvidia this week as well. So look, there's a lot to talk about. So hopefully you'll enjoy the session, and I'll see you in a bit. All right, ladies and gentlemen, hello, and good morning, everybody. Hi, my name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today is Monday, ladies and gentlemen, the 25th of August, 2025. Welcome to the last Monday of summer. Last Monday of summer, yes, officially summer, of course, depending on where you are, in which region, maybe it's still summer there. But look, welcome everybody. I hope this summer was good for you, and well, actually I'll ask you this question on Friday probably, but yeah, I hope everything went well for you this summer, and the markets were kind of good to you. Now look, we have a lot to talk about. I'll try to go straight to the cut to the chase, and basically just kind of go through these little things that I need to mention very quickly. The risk disclaimer that we need to go through, and the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. In the meantime, I will put my usual good morning in the chat room. This time I will try to be quicker. Oh, there we go. There we go. Good morning, everybody. Yes, so there we go in the chat room. Also, just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. Now, also, something that I wanted to mention is that this week on Thursday, I am running a closed webinar, registration only, where basically I'm going to talk about the MACD and how we can use that well, you all know this indicator, of course, but we'll try to dig in a little bit more and to see different scenarios. And of course, we'll try to place a few live trades on our demo account, with basically where we can see how it actually works in practice. Certainly we'll be looking at shorter time frames, because we have limited amount of time, and we want to kind of utilize it to the max. So yes, so for now, like I said, just kind of join in. Hopefully you'll enjoy the session. You can find the link in the description of this webinar, and yeah, we'll go from there. I'm looking forward to seeing you there on Thursday. Oh yeah, on Thursday actually. So ladies and gentlemen, before we jump into the markets, before we look at what the craziness that we saw on Friday after Jerome Powell's kind of speech, let's have a look at what's happening this week on the economic calendar. Now, first of all, today, Monday, UK is on celebrating bank holiday, and if you are trading something UK related, well, don't expect much, because again the market is closed. So yes, the UK is coming back into action tomorrow, but today we're getting the IFO business climate from Germany. Now this is something that that the market will be keeping a close eye on. Currently the forecast is kind of the same as previous, but if there is a little bit of deviation from this to either of the side, now that's where we could see some interesting maneuverability. In terms of other data, we have the building permits and new home sales coming out from the US, so keep your eyes on those. A little bit of maneuverability could happen there. Australia on Tuesday, early hours of the Asian morning, will be releasing their RBA meeting minutes. Well, we do understand that there's not much basically to talk about. Yes, I mean, a little bit of movement here and there could happen. We know that Australian interest rate currently sits at 3.6 because they have in August, and on the 12th of August they have dropped it from 3.85 to 3.6. So that was expected, and I mean, okay, we will, we will just get that, oh, how confident they were in, in cutting rates. Look, I'll get to the Australian dollar in a bit, which is quite interesting right now. But it may be during the meeting minutes, maybe we'll hear some sort of like, that, oh, the bank isn't like willing to continue cutting if needed, and that could keep Australian dollar kind of limited. They could keep Australian dollar gains limited. So something like that could happen in a way. So, but again, we'll see. Well, I'll jump into Forex in a bit. Then going further, Tuesday, other data, durable goods. From the US, those are coming out. Manufacturing sales here, preliminary numbers from Canada. House price index. Now that's going to be an interesting one as well here. The month and year figure. So we'll see how that's going to come out, how that's going to shape up. If it's going to come out to the downside, because so far we have been seeing this movement lower, and house prices have been, well, drifting nicely to the downside in a way. Something that's probably not a lot of people want to talk about, but hey, it's interesting. It's very interesting. But to me, this is more of an indication that people are becoming more and more cautious, and maybe the market is a little bit overdone with, it's way too expensive in a way, and people are not really, it's becoming a little bit more difficult for people because, again, although inflation is seeing kind of, it depends on which region, of course. If US, we're seeing inflation kind of picking up a little bit, so people are, starting to save a little bit more, maybe kind of push away that house purchase a little bit further to understand what's going to happen, because at the moment we don't know, and we know that tariff effect should still kick in later on this year, so in this whole second half of this year. But for now everything is okay still, but I think that yes, companies will start passing on costs to the consumer. So yes, and maybe that's where house prices are now starting to drift a little bit to the downside, just because, again, everybody's kind of getting a little bit worried, I think, as always, to be honest. CB consumer confidence, this is something that seems to be on a bit of a, expected to come out a little bit higher. What can I say? That's fine. I mean, if it comes out at 98, that's fine. It still is quite high, has been quite high, well, let's see if this is not going to be a disappointment or anything. If it is a disappointment, then certainly there is a bit of a possibility for the stock market to reverse back down. Let's see how that's going to play out, of course. Going into Wednesday, we are getting the Australia's monthly CPI indicator. Now that one's expected to tick up a little bit, and this is a bit of a blow for the RBA, because, again, they are on this path of cutting rates. However, the RBA, I would say, is still doing quite well, because they're adjusting carefully. They're not pressured like some other central banks. They're not pressured. They're okay. Everything. The economy, Australian economy, seems to be working fine for now. But yes, inflation is slowly ticking up, and of course the RBA inflation target. Now, let me just remind myself. I think it's okay. It's always around 2%. But I think that they have between 2 and 3%. So this is still within the RBA's target. So RBNZ is between 1 and 3. There we go. Sometimes I get these two confused. But yes, RBA inflation target is between 2 and 3. So comfortably within that range. Let's see if that's going to be the case. If we do see a higher than the forecast number, then we could expect Australian dollar popping even more to the upside. For going further, Germany, GfK consumer confidence as well. Another, we have the IFO business climate numbers coming out on today, business climate, and then yes, we are on Wednesday. We're going to get the GfK consumer confidence. Now this is going to be an interesting moment here for the euro. Maybe, you know, if we get a decent number, not in negative territory, maybe like closer, or at least getting closer to zero, then yes, that could be seen as a positive for the euro. Let's see how that's going to play out, of course. Now I keep on monitoring this MBA mortgage rate, the 30-year mortgage rate, which continues to slide here, as you can see. Well, to be honest, understandable, because if we have new home sales, which were kind of expected, you know, to shift. Where is that? No, wait. It was. Where's that number? House price index. There we go. If we see house price index drifting lower here a little bit, then there is like this kind of idea that maybe, you know, like we need to see lower rates here. Where I got it's lost in this calendar here. There we go. That's what I'm talking about. So this is the chart. So if we are seeing house prices going down a little bit, then of course, understandable, the interest rate needs to go down a little bit as well. And recently, of course, with the Fed's announcement, or should I say Jerome Powell's speech in Jackson Hole, we saw that they're committed still to go and do the cuts. I'll pick up on Jackson Hole in a bit, but then yeah, we can see that this mortgage rate needs to come down a little bit more in order to attract interest, and maybe then the house prices could stabilize again, because again, more people would, you know, see the interest rates more attractive. This is where the house price curve could shift back up here. But again, it's let's see, you know, if the other factors are not gonna factor in, you know, if I can say it this way. Anyway, going further in terms of economic calendar, Thursday we have a few speeches here and there. Nothing major. New car registrations in Europe, something to keep in mind if you are trading something Europe related. If you're trading something Swiss related, well, keep your eyes on the GDP growth number. That's something to monitor. If we do see better numbers, at the moment we're seeing the Q-on-Q on the downside. This is not very good. But if we do see a better number than this forecast, maybe this could help, you know, the Swiss franc to stabilize, or not to stabilize even, but to keep its somewhat of a strength, you know, against especially the US dollar. Consumer confidence, something like that is coming out here. Yep, from Europe on Thursday. Keep your eyes on that one. At the moment, the expectation is for a worse number. So again, could be some weakness. We could see some weakness in the euro if the number comes out even worse than the forecast here. Going further, we are getting now. Okay, on Thursday, we're getting some numbers here. Initial and continuous jobless claims, also together with the GDP growth rate, the estimates. But what you should keep an eye on, of course, as well as pending home sales. So a lot of home data, you know, coming out from the U.S. this week, just to kind of for us to understand the state of the housing market. It's quite important, in my opinion, and you should not ignore this data, because look, housing for all of us is kind of one of the top priorities. You know, like we allocate a big portion of money towards housing, and you know, that's why whenever we see shifts in that market, whenever we see shifts in the data, we should be taking, you know, careful consideration. So long story short, keep your eyes on that, you know, we can then adjust, we can see how the economy performs in general. So again, I cannot say much, you know, in general about this, because we need to wait for the data. We'll see. We'll take a look at it. and then we'll react accordingly. Now, now Japan here, again, depending on where you are with timing, but basically it's like early Friday morning, the last trading day of the month, and yes, Japan will be delivering its kind of data dump basically, because we'll have job numbers, we'll have the Tokyo core in headline CPI, we'll have, we'll do the same unemployment, industrial production, retail sales. So from various specters of the economy, we'll be getting various specters of the Japanese economy will be getting these numbers here, so keep your eyes on those. And of course Friday, jumping into Friday, we'll get the German retail sales, German unemployment numbers, some inflation numbers from Germany as well, but also from the EU as a whole. Let me just, yes, consumer inflation expectations, that's what we're looking at. Hey, yes, like I said, the German one is quite interesting, but I think that the spotlight could fall on the U.S. core and headline PCE, the Fed's favorite inflation metric. Now, look, in terms of the Fed, in terms of Jerome Powell in his speech, he of course said that yes, we are ready to go for that interest rate cut in September, and you can see the probability here rising back to 87%. On Friday in my morning video, we were somewhere around 70, I think, and look at this, we jumped back to 87. So in a way, yes, the market is now anticipating that rate cut. We know that it's currently sitting in between the 4.25 and 4.50 range, so ready to drop it to this area. Look, this number here, where's that PC? PC year on year, 2.6, the previous. In general, it is above target of 2%. So that's the problem for the Fed right now, that inflation is important. The inflation is above. However, it seems like we're shifting away from this kind of focus on inflation, and focusing now on just maybe like unemployment, job numbers, and like kind of screw this, let's leave inflation for now, let's not focus on it, let's focus on the labor market. Now, is this a correct approach? I don't know. Well, time will tell, of course, but for now, I think that Jerome Powell is kind of, I wouldn't say given in. I mean, the forecast was, we already kind of, we were expecting the cut at the, in September. But I'm curious how it will go further. I mean, are we just going to ignore inflation and just going to go focus on the labor market? Because inflation, in a way, has been, quite on a roller coaster ride. Whereas that current inflation number in the US is 2.7. The headline CPI is at 2.7 year on year. And that's, of course, we're seeing a tendency to the upside. And of course, given the fact that the tariffs are in place, I think, yes, the companies, I think once, they will fade away the whole tariff talk in order to push it away. But then we will get suddenly hit by those tariff costs that were passed on to the consumer. And we will see that in the data. And that's where, the whole thing again will explode. Oh my God, I think that the labor market could suffer as well. The labor market could suffer because, again, if companies suddenly will see that it's way too expensive for them even to pay that, those 10, 15, 20%, whatever, import taxes, import taxes on goods. So, what you're going to do, the first thing you're going to do is you're going to cut jobs. That's, and of course, you'll say that it's not because of that, it's because of the AI, because we found a better way and it's more efficient and blah, blah, blah. So, you're going to shift towards that. So the labor market will suffer. So you will have eventually higher inflation. You could have higher unemployment and a slowdown in growth. Stagflation, right? Again, I don't want to be the bearer of the bad news, but I think the market is talking about this. It's I think some analysts already started talking about this much earlier. So again, we need to kind of be a little bit on the careful side here. And again, like I said, we'll keep an eye on the PCE if suddenly that pops above the 2.6, and the core. The core one, which excludes food and energy prices, if it also pops above, above the previous number and comes out at somewhere like around, maybe closer to 3, that's a little bit of a bummer. Yeah, it's a little bit of a bummer for the stock market. And I think the stock market could reverse south. And, it's a perfect timing here. I mean, the market could drift lower here on Friday if, like I said, the PCE numbers come out on the higher side. Speaking of the stock market, now let's quickly run through this because we have Japan, which rebounded nicely. I talked about this idea very quickly about a possible inverted head and shoulders pattern. So the left shoulder here, head, right shoulder potentially, not maybe the pitch perfect, but hey, let's see if the neckline can get broken. If we can break this neckline near the 42,500 zone on my chart, then yes, I'm leaning a little bit more towards the downside. China 50, let's have a look. Beautiful rally. I mean, this is just continuing to blow up to the upside. We are approaching this 15,406-ish zone, which is near the highest point of October of 2024. That's a good area. That's a good target. And hey, what I can say here is that for now, it's going well for China. I think that they're finding good deals, and I think that somehow they became in control because look, with Nvidia, there last week there was the big talk that they were doing these chips, the H20 chips, preparing those for China, but then China said, no, you know what? No, we're going to stop those orders because they need better. They need better chips and not like second class, chips or anything like that. So, but yeah, and Nvidia is really, like I said, in this position where right now they halted the operations for the H20 chip. I don't know if when they're going to resume. They will, of course. They're now in negotiation, and yep. Look, Nvidia this week is reporting earnings. Oh, by the way, White Castle, I can see you there. Good morning. Thank you very much for your question. GBPJPY. Yes, this is one of those pairs that I pick up as well. It's in the list. So if you don't mind, please be patient because I'm going through indices, then I jump into Forex, then I go into commodities, and then I don't go into crypto. So if you don't mind, like I said, just wait a little bit. I'll finish with this, and yeah, we can go into the Forex. But yes, thank you very much for tuning in. Really appreciate that. So yeah, coming back to the situation with Nvidia. Look, you know what? Let me just jump into the U.S. market first. First of all, I'll pick up on Nvidia because this is an important topic this week. So we popped. Dow just exploded to the upside. Look at this amazing move here, almost like I would say 1,000 point move, but no, actually it was more like 700 point move, something like that. But still significant rally here. I mean, amazing. Look at this. Sure, doctor. I don't know. I wouldn't say that I'm a doctor, but yeah. Thank you very much. Thank you for the kind words. Look, we rallied. We rallied nicely. Now everybody's like thinking, what's next? Is the 46,000 zone on the cash index next? In a way, it could be, yes. I mean, I'm not really saying no to this. And look, if to follow the logic of PCs potentially coming out on the higher side on Friday, which could bring the stock market lower, then up to then, we could see, some movement to the upside. However, However, what I want to say here as well, that maybe the opposite could happen. Maybe up until Friday, we could now kind of correct back down here, drift a little bit lower, form something of a bullish flag here on this chart, because we have ourselves a nice pole, right, with the Friday's candle. So maybe we'll, form something to the downside here, pop, and then on Friday pop higher. But again, this is all speculation. I would say just go slowly on this. If you're looking for some higher levels, then, well, be careful. Keep your eyes on the current all-time high. If we clear it, then we can go to the upside. And then I'll aim for that 46,000 zone. But for the downside, at this point, if you ask me just specifically at this point, I am just not touching it. I'm just observing the price action and not really doing anything. S&P 500, beautiful move, all-time high, very close to that. After we did our 50% here on the Fibonacci retracement, which I talked about, there we go, picture perfect. I said too that if we do jump back above the 38.2, I'm leaning towards the upside. Boom, there we go, look at this move. Anyway, we can get rid of the Fibonacci, no longer needed. Now we're focusing on this. So, you know what, I'm going to keep this hurdle. I'm going to add this one instead. So this was a good area of support, 6,342. I think we need to keep that on the chart. And most importantly, now we're watching the current all-time high. If we clear it, on the cash index, then yes, I'm leaning towards the upside into uncharted territory on the S&P 500. 6,500, next target, yep, pretty much that's it. NASDAQ, now tech did rebound beautifully. We had this upside line. I talked about this in my Friday's webinar as well. So I said that, look, if we do clear this upside line, I'll lean towards the downside. But if we rebound and push back above the 23,261, then hey, I will consider a move to the upside. So, long story short, I am being very careful right now. I am, like I said, with the tech, it's difficult. And why it's difficult? Because of these guys. These guys here right now, I heard this this phrase recently on news. It's not my phrase. I mean, I heard it. I like that. In the U.S. right now, there are two economies. There is the tech economy, and there is the rest. Period. So basically, it's like you have your, you have your tech giants like Meta, which rebounded as well. Everybody enjoyed the moment on Friday. Meta, MSFT. Ish, okay, not maybe the best one. Google, there we go, boom, there we go. Amazing jump, NVDA, massive jump, AMD, massive jump. So, you have your tech and giants which kind of rallied beautifully. So, and given that Nvidia is reporting earnings this week on Wednesday, so keep that in mind after market closes. Keep your eyes on that. And recently I found out that, when I was thinking like, how are they suddenly started talking about this kind of H20 chips, be getting developed specifically for China. How was the US okay with this? Because again, initially they were not, and then they're like, suddenly, oh, and now everything is fine. Well, yes, they say that because the H20 chip is not the the super chip that the Nvidia has, is kind of specifically tailored for China, which China says no longer wants. But I think no, the reason why it got approved now to be why Nvidia got the approval, got the green light to sell things to China, and again, was because yes, they managed to come up with a way to create this chip, which is specifically for China, but also the 15% of revenue share. Basically, the U.S. government is getting 15. They agreed that the U.S. government will take 15% of all revenue, not even profit, revenue from sales to China. Now, this is fascinating. I mean, this is very interesting, and like I said, it's kind of, honestly, if you're telling me that everything is like this is fair, like this is not something that should be done in a way like the government this is I wouldn't say it's privatization, no, like if when you have full 100% ownership, right, or maybe at least 51% of companies, it's this is like these little steps of privatization, or we can call it that way, that are happening. Or it's not even like, okay, the privatization word is way too strong for that. It's more of a like something very like something like a small echo of that privatization. But in general, the fact that money dictates everything, that's straight away. Initially there was a big thing that well, let's not sell chips to China because it's a security, national security issue and everything. But then when you share 15% of revenues of Chinese revenues, then of Nvidia's revenues to sell from sales to China, then it's fine. Then there's no national security. Yes, they will say that we are building a different chip, but is how different can you make it? And that's why China probably is saying like, we don't want those chips anymore, because like it's like you're treating me as a second-class citizen. So anyway, are we doing business here or are we not doing business? So yeah, that's the interesting bit. Anyway, we'll see how Nvidia plays out. Again, look, I'm watching this all-time high, 184.48 zone. If we can clear that, I'm going to go higher. At this point, I'm just observing the price action. For the downside, a drop below this hurdle here, 170.89. I think that could be an interesting target. Dollar index. So of course, didn't like the whole interest rate cut commitment. Didn't like that by the Jerome Powell. Look, is this a done deal in terms of cutting rates? Yes, I think so. But I think that then this is exactly what the market doesn't like right now. The dollar market doesn't like right now. So we're seeing this negativity. However, we're going slowly, step by step on this one, in case we suddenly see some headlines coming out saying that the interest rate cut is not a done deal. This could support the US dollar from falling off the cliff here. And I think that this is what's going to happen. I think that they're going to be coming out with these, these statements, that these headlines will be appearing that no, it's not a done deal. Still there is possibility for not going for a cut. But no, they will go for a cut. So I think the market will understand that, and maybe the DXY traders will also understand it. So a drop below the 97.42 territory here would be needed in order for me to go further south. German index DAX. Look, I talked about this a lot on Friday, and I did throw out a little piece here on TradingView where I was talking about DAX and how it's still holding strongly above this hurdle. Look at this. We're wiping out all the gains made on Friday, and we're drifting lower. And yes, the DAX is open right now, and look at this. It drifted back to this 24,200 and 200 zone. So it's a good area of support. We held nicely below this downside line. Am I getting very bearish here? Not yet. I'm cautiously bearish, yes, but am I very bearish? No, because this area has been proven to be a strong one. If we clear it, I'll go lower. I still have a chance of this one seeing a move to the upside, but again, I kept on saying last week, wait for the break of this downside line. If we can get a break and we see the body of the daily candle staying above that area, then yes, I'll go to the upside. The German index DAX. So what we are seeing here is the this kind of slide. The German index DAX. I already talked about DAX, but this is the main index here. So this is a little bit of a different picture I wanted to show you basically. So the cash index is showing this, whereas the main index is showing kind of this idea. So there is still hope for the upside, hence why I was talking about this potentially kind of not giving up on the upside yet. So again, it's you need to sometimes look at these different things here. It's very subjective, don't get me wrong. This downside line, it's very subjective. It might not work. Maybe it's actually this way that I should be drawing, so it's always like a matter of interpretation. We're all trying to find some sort of logic, and that's why we refer to technical indicators, but don't forget about the fundamentals as well. The FTSE 100, very quickly, like I said, the UK is closed today, but the cash index here is moving, and we're seeing a little bit of a retracement after a nice all-time high here on Friday. Look, I'm not going to say much, but if we do clear the current all-time high again, I'll go to the upside. Let's jump into the Forex world, and yes, White Castle, I hope you're still with me here. Sorry for the lengthy, kind of lengthy introduction, not introduction, but moment on the indices. But to be honest, the market is really interesting this week, last week. I mean, in general, right now, the market is very interesting. So I have to kind of mention these things. Look, AUDUSD. I talked about the Australian dollar. I said that keep your eyes on RBA minutes. RBA minutes. Where are those minutes? Where are those? Those are RBA meeting minutes, which are coming out on. Oh, was it Tuesday? Yes, Tuesday, tomorrow. So, look, in general, we had a strong move to the upside. I talked about this idea here, a possible rebound from this territory from the 0.6418. That's what I mentioned here on the quick Forex update. You can check it out. That was on the 21st of August. I said to you, look, it's an interesting one. If Jerome comes out saying that they're still going to do the cut, then we could see weakness in the US dollar, and there we go. Weakness in the US dollar. AUDUSD popping beautifully to the upside here. So either way, we're still within this idea of a descending triangle pattern. So according to all the TA rules, such patterns tend to break to the downside, so we need a clearance of this lower side. If you're looking for some higher levels, pretty straightforward. A clearance of the upper side is needed. AUDNZD continues to push higher, but it's an interesting one. Maybe this could find resistance somewhere here, and then we could see maybe a reversal back down. So I'm keeping an eye on this pair. I like this pair very much, and let's see if we can get a reversal like that. Today probably we'll get a push further north, but then if the RBA meeting minutes will just state the same thing again, that the RBA is committed to continuing to cut rates if needed, then we could see weakness in the Australian dollar kicking in here, and we could see a nice beautiful reversal back down. AUDJPY, similar story, but this one is more of a risk on, risk off monitor, which I need to get rid of all the drawings. To be honest, it's a fresh look. I need a fresh week, new week, and yeah, it needs a fresh look. So 97.47 for the 97.43, 42 zone is the one that I'm watching for the upside. I know it's a lot. For the downside, it's this very straightforward, to be honest. But I'm not gonna rush into things. I will keep an eye on this, and hey, if we do break the downside line, this short-term tentative downside resistance line taken from the high of the 28th of July, then yes, I'll go to the upside. I'll go higher, and I'll aim for this area right here. Jumping into NZD/USD very quickly, beautiful reversal. Of course, the same story, basically the US weakness in the US dollar and beautiful rebound. So hey, not much to add here, apart from the fact that there's the risk on has improved, or again is back on the table. So that's why we're seeing these commodity linked currencies rallying beautifully. USDJPY, beautiful decline. Of course, we understood, that's what happened because the XY declined, and it brought this pair lower. Not that it's the strength of the Japanese yen, no, it's more of a weakness of the US dollar. Now with this, I would like to get rid of this upside line, no longer needed. Now I'm watching my EMAs because we're currently stuck in between those. If we do drop again and stay below all my EMAs on the daily chart, I'm leaning towards the downside. USDCAD, very quickly, USDCAD is, yes, beautiful decline. Again, we have nothing else to expect here, but but look, I'll say this way. At this point, when we're back in between the EMAs, I don't like this, and I'm just observing the price action here, so I'm not touching this. Unless we pop back above the 200-day EMA, I'll consider it move higher, but if we fall below the 50-day EMA, I'm going to lean a little bit more to the downside. USDCHF, beautiful decline. There we go. We dropped. And yes, we fell below the 0.8025, and yes, we're still trading below that little hurdle. So I'm leaning towards this upside line. Oh, Anish, I can see you there in the chat room. Thank you very much for tuning in. Really appreciate that. How I am? I'm okay. I think I'm okay. Yes, you know, trying to get to understand this market right now, and to be honest, so far I do. So far I do. Let's see if it just works out in my favor. Euro USD, beautiful rebound from this 50-day EMA. I talked about this. I said that if we do stay above the 1.16 territory somewhere here, look, I'm targeting this downside line. Perfect hit, boom, test, tick. And yes, now the question is, can we break this downside line? Well, if I'm expecting the DXY to continue to slide, then yeah, I'm expecting this one to pop higher. But if we're gonna, like I said, when I was saying that if we're gonna see some headlines saying that, oh no, we're not really gonna, it's not 100% guaranteed that we're gonna do the cut now, then we could see some fluctuation here up and down, because again, the US dollar could strengthen a little bit. We could see this movement back down here, but I want to see if this is not going to end up in something of a bullish flag here. This little formation, we have ourselves a pole now. We're seeing a little bit of a corrective move lower here. Again, let's see if this is not going to end up like a bullish flag formation. But either way, I'm talking about this little area only. Yeah, this small starting from Friday's candle. But then either way, if it is a bullish flag, okay, I need a break of this downside line in order to get a little bit more excited with the upside. EUROJPY, this one's stuck, and I will stick to my rule that if I'm looking at some higher levels here, I will wait for a push below the 173 territory, a drop below the 170 or 71 zone, somewhere there. Then yes, this could open the door to some lower areas. GBPUSD, and then I'll jump into GBPJPY in a bit. So GBPUSD, similar story. Look, a beautiful reversal. Perfect. I cannot stress this enough that I talked about this idea of a possible inverted head and shoulders pattern, left shoulder, head, potentially right shoulder. And if that's the case, I'm waiting for a break of the neckline. So this is going to be my next target for now. This idea worked out. I talked about this last week, and let's see if we can travel back to that 1.3585. Look, I'll abandon the whole inverted head and shoulders pattern if we start kind of messing around here, maybe, or maybe we drop below the 100-day EMA here, shown as the blue line, and then yes, then we'll have to look at something else, But at this point, it's an interesting one, and watching this, like I said, this potential neckline near the 1.3585. Let's see if we can travel to it. GBPJPY. Now this one's interesting. This here, we had a nice, beautiful reversal from this 195 territory, basically kind of remaining somewhere near this, from this 100-day EMA shown as the blue line on my daily chart here. We rallied, we traveled above this 200 territory, briefly visited that psychological 200 zone, and it became somewhat of a good area of resistance. So the 200 zone, or 200.270 here, that's the good barrier to watch. If we do clear it, then yeah, we're gonna go higher. This is just a straightforward moment. Now, could we clear it? Yes, because what I'm looking at here, let me just try to see if it makes sense. I'm looking at this downside line, which is taken from the high of the 18th of August, but also I'm considering this to be a falling channel, which means that while we remain inside the channel, this could still drift lower. But theory goes that whenever we create something like this, we look at the prevailing trend. The prevailing trend was to the upside. So yes, we traveled higher, then we entered this falling channel. So in a way, the greater chance for this one to break out is to the upside. If we clear the upper side of this falling channel, great, wonderful, I'll go higher. I'll go towards that 200 zone, and maybe even to the even more upside. But I have to stress this and to say that while we remain inside the pattern, we could still drift back down. So just keep that in mind. And if suddenly the market sentiment changes and the stocks suddenly start reversing sharply to the downside, be careful, because the Japanese yen will pick up interest, and it will pick up interest. It will become attractive. Everybody will start jumping into the Japanese yen, and we could see this one. We could ignore this whole falling channel idea maybe, and we could see push further south. So just keep this with the approach this with a pinch of salt. Yes, it's for now it looks positive. But you need to be, like I said, you need to be careful with this one, because again, it's in the falling channel, and it could be, we don't know when it's going to clear that. So although it could be seen as a positive, but while we remain inside it, we just need to respect it for now. So White Castle, I don't know what kind of view you had on it, but yeah, that's my idea. Let's see how this is going to play out. Jumping into the commodity world, ladies and gentlemen, gold. Look at this. Good movement on gold on Friday. Of course, that exploded. Lower interest rates. Everything is tempting for gold. Yeah, they're great. So what I talked about, I said that look, we're in a bit of a squeeze right now. We're getting squeezed, and we're waiting for that clearance now. 3,374.75 zone right here was acting as a good area of resistance. The question is, can we see a breakout here? If we can, that would be interesting. I would say that would be very, very attractive here for some higher levels, especially if we clear this downside line. If we clear it, my next target is the 3,430.50 zone right there, and then we'll kind of just take it from there. For the downside, a drop below this upside line here is required. That's what I'm going to do for now. If we can clear this upside line and we can clear this 3,315-ish zone, I'm leaning towards the downside. Silver, beautiful pop above this 38.72-ish zone, basically the high of the 14th of August. We cleared it, and now it seems like we're aiming for the highest point of July. Let's see if we can reach that, or in general the highest point of this year. Let's see if we can reach that, and let's see if we can go towards that psychological 40 level. Palladium, of course, together with the market, rebounded on Friday, but we're still struggling with the 50-day EMA. I'm still kind of leaning cautiously towards the upside, but I have to admit that there are some obstacles on the way higher. For the downside, a drop below this upside line, below the 100-day EMA, wherever it's going to be, is needed in order to consider a move to the downside. Platinum, again, stuck a little bit here. I'm not really getting bullish with this one, no. On the contrary, I am maybe leaning a little bit more towards the downside, because we had a strong decline, then we're now moving sideways here, and this is a kind of a typical scenario when if this is a range, or if somebody would say probably, oh, but Darius, maybe it's an ascending triangle pattern. Look, maybe it is, maybe it's actually more of a rising veg like this. If it is a rising veg, it's theory. It's a push to the downside, basically. This is what a rising veg is. But again, we need a clearance, of course, as always. We need a clearance. So we're gonna see. While we remain inside this pattern, I'm not gonna touch it. And once we see clearance of one of the sides, then yes, I'm gonna consider the next short-term directional move. Copper, very quickly on copper, again, popped higher, but again, I'm considering this maybe as a possible bearish flag, something like that. So I'm not really very keen on the upside yet. Maybe a nice spike higher here, because just maybe we could see a Fibonacci here working out. So taken from the highest point of July to the lowest point, the current lowest point. Oh, actually, sorry, not the current lowest, the lowest point of July. So if we measure this, then we'll see that there is room for an upside move here towards the 4.71. but a clearance of this 4.54 territory is required. If we can get that move, I'll consider a move higher, but only towards that 23.6, which coincides beautifully with the 200-day EMA on my daily chart. Oil looking good. Now look how well this is holding here. $64 mark, the previous barrier for the upside. I was talking about this one. It's currently providing good resistance. So yes, I would say there is a chance for this one to drift back down. I'm not gonna, say anything yet, but as long as we stay below the $65 mark, I'm leaning towards the downside. Natural gas, I'm trying to climb back up, but still remains below that psychological 3 level, and I'm going to continue targeting the downside. Now, coffee. And for that, I will have my cup of coffee now. Look, I talked about it. I said to you when we were hanging around here, I said, look, if we do clear this, I'm going to go higher. My next target is this downside line. Now, I don't know what's going to happen next, or we're going to, break it or not, but this is working out beautifully, I would say. So we're approaching this area, and now what I'm going to do, I'm going to chill. And I'm going to just wait and see what's going to happen here, and then we'll go from there. So long story short, if we're looking for some lower areas here, then like I said, I want to see if we're going to get a hold up somewhere near this downside line. If we can, then maybe a bit of a retracement back down could be possible. Cocoa, beautiful hold up around here, around this area. Yes, we violated it, that's fine, but like at the end of the week, where we were, we remained above this area. So yeah, false breakout. So look, I need this clearance on the weekly in order to go further south. At the moment, we're actually considering maybe a little bit of a retracement back up. Wheat, amazing. Look at this. Oh my God, look at this. This is amazing. Boom. It's basically, the talks that Russia and Ukraine probably cannot really reach a deal yet. That's what's spiking this. That's from my opinion. That's what's spiking this this price here to the upside. Again, the two countries are the top wheat exporters. If you don't know that, then top two wheat exporters. So yeah, there we go. We are seeing this spike back up. I don't know, like from the technical perspective, here, beautiful, move back above the $500 mark, and now the question is where we're going to go next. I think I'm going to target this 200-day EMA first, and then we'll take it from there. Sugar is still holding above this upside line. It's still loving this upside line, but it cannot go away from it, but at the same time it cannot break it. So let's see if we can break this upside line. If we can, then yes, I'm going to lean towards the downside. But if we cannot, look, my upsides now is very straightforward. I'm taking a conservative approach here. If we do clear this $17 mark, then yes, I'll go higher. Cotton, very quickly on cotton. Okay, this needs to be drawn this way probably a little bit. Or actually, let me see if this is actually a falling channel in general. No, this downside, I think this is not going to be a falling channel. This is going to be something like maybe a broadening triangle, but again, it's not really broadening wedge, something like that. But no, you know what? No, we're not trying to improvise here too much here. Look, I will say this way. This looks like a bullish flag. We have our pull, we have our correction here. So we need a clearance of this area. If we can get this clearance of the 200-day EMA of this downside line, then yes, great. My next target is the 69.38 zone, 69.72, and then we'll just kind of take it from there. For the downside, a drop below the 67 mark would be needed in order to consider lower areas. And finally, ladies and gentlemen, for dessert, where are my cryptos? Where are my cryptos at? There we go. Beautiful. I talked about this, and despite the weakness in the US dollar, the cryptos are not feeling the love as well. And look, I said that if we do fall back below the 116, territory, my next target is 112, and then we're watching that 110,550. And honestly, it has been amazing. Look, I did a crypto update last week, and this is what I talked about it, and you can check it out here in our channel. And basically I said that, look, what we could have here is like a quick drip, quick drop to the downside, a test of this 100-day EMA together with 110,550 zone, tick, rebound, push back up, and we could end the week, still above the 112 zone. But now we're seeing some weakness again, and the question is actually, can we not see this one drifting lower? Look, at this point, I'm not going to rush into conclusion. At the moment, I am carefully monitoring this territory, this key area of support. If we do rebound, there is a chance for a push back up, but my upside is kind of more from the 50-day EMA. But if we do clear the 100-day EMA and stay below the 110,550, then yes, I'll lean towards the downside. And well, I will be then aiming for that psychological 100,000 zone, to be honest. Bitcoin Cash, beautiful decline. Look at this after a good rally, tested again this 605 territory. Look how well it's playing out, and we tested that, and we're drifting back down. So now, basically, my upside scenario is from here. My downside scenario, which is getting a little bit, we're getting closer to that, is yes, it's still on a break of this lower side of the rising channel and the 50-day EMA. So if we can clear both of those, I'm leaning towards the downside. Ethereum, again, beautiful decline. Yes, what can I say? It's a good move here, and let me just double check something here. Let me just double check this chart. This is the yes. So we created a beautiful all-time high. Let me just jump into weekly. So we created a beautiful all-time high here this month, and let me just see. The previous one was here, 4,867. We went and hit that area very close to 5,000, and now we're seeing a little bit of retracement back down. To be honest, everything is logical. Let me get rid of these drawings. Everything is logical, and let's see if we can, get a nice. Let me get rid of this Fibonacci. Let's see if we can get a nice retracement back down towards this upside line. This is what I would like to see here. For me, if I'm looking at some higher levels, very straightforward. A clearance of the current all-time high is required. Ripple. A Ripple drifting back down, drifting back below that psychological 3 zone. So let's see if we can stay below that. If we can, I'm leaning towards the 2.75-ish zone, somewhere maybe around here, maybe a little bit lower. Litecoin, again, yes, falling back down, and yeah, this downside line no longer needed. That's it. It's done its job. Has done its job. Now we're watching this area here. 112 territory, so 111.92. If we clear that, if we do drop below the 50-day EMA, then yes, I'm gonna lean a little bit more towards the downside. For the upside, what I would like to see here is I would like to see a break of this downside line. If we can clear it, then yes, great, wonderful. More buyers could join in. Dogecoin, Polkadot is going to be the next one. Dogecoin, similar story. Look, we're drifting lower. We could say that maybe we're coiling up here. And yep, if we clear one of the sides, very simple. I'm going to consider the next short-term directional move. So keep your eyes on that one. Polkadot. There we go, drifting back down after a good rally here. A test of this downside line, tested it, and struggled to remain above it, drifting back down. Look, we remain inside the pattern, and if you actually, what I'm going to do is here, I'm just going to take a very conservative approach here. I'll wait for a clearance through one of the sides, and then maybe do something about it. But at the moment, it's just, it's a little bit tricky. And finally, Tron. There we go. Look at this reversal. After failure to overcome the 0.3682, we are drifting lower, and we're now flirting with this upside line. And to be honest, we're showing signs that we want to stay below it. If that happens, I'm leaning towards the downside. How much to the downside? Well, initially just aiming for this 0.3440 zone-ish, and then after that I'm targeting the 50-day EMA shown as the green line, wherever it's going to be. So, ladies and gentlemen, that is a wrap. That is a wrap. Thank you very much for watching, listening, ladies and gentlemen. I hope you found it useful. White Castle and Anish, thank you very much for your comments. Really appreciate that. So thank you very much for tuning in. That means a lot to me. You know that I always encourage this interaction. You know, it's great that you're asking questions, because again, we need to ask questions. We need to understand, you know, what could happen, how we can, you know, position ourselves. Certainly, as always, I keep on saying, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. And I will see you on Wednesday, ladies and gentlemen. And like I said, don't forget to sign up to my webinar on Thursday, which is going to happen. It's like a Friday, it's a closed event. So hopefully you'll like it. And hey, now we'll go from there. So ladies and gentlemen, thank you very much, and I'll see you on Wednesday. Bye bye.